those, it's terrible. All right. So let's talk about the market. We had some decent news out of Europe involving the ECB, but that does not seem to be affecting things very much right now, right here. As you can see, the market is kind of doing nothing, down a little bit. We're getting a little pop in volatility. And a little pop in volatility. A little surprised by that. I mean, we had kind of a weird reversal. Yesterday, vol came in, and today, vol is rallying. S&P is off its all-time high by 0.8%. You can see the futures are moving a little bit. That's probably in relation to non-farms tomorrow. Maybe things got a little overdone yesterday, but they keep front-running stuff. LinkedIn was down big yesterday on convertible news, and now is back up. Tesla, they can do no wrong, folks, remember? So it's going to go higher. You know, delays in the Model X, who cares, right? Nothing to worry about there. So that is what, you know, I'm seeing in the market today. Just, you know, NASDAQ tech a little weaker. Vol up a touch. Gold finally catching a bid. But after breaking, GLD broke 110 yesterday. That's how bad things are for gold and oil. Just the dollar is really strong. All right, and now one can see JP Morgan's rallying off that, the Goldmans of the world, a lot of stocks. But what's not is, you know, anything that's dependent on currency. That you add that and to the oil glut, and you get Halliburton threatening the 1 or 50. You get XLE at, you know, relatively low levels. I mean, look at where Halliburton is now. All right. Oh, that's not what I'm looking for. Here's Halliburton. Let's pull up a one-year chart. It is now almost to its 52-week low. If below 50, it starts to look really interesting. Now, what's in addition, what you're getting out of it, underline. And here's why options look kind of meaty and juicy in these names. Take a look at the volatility relative to a year ago. So when it was at its 52-week low, the vol was, you know, below 20. Now, it was below 24. Now it's near 38. So put sales, things like that really do look interesting here, all right, as a play. This is one of the things that we were messing around with. XLE, you want something that's a little more, you know, not a single stock. Here's something that potentially makes sense for, you know, some sort of condor play, some sort of vol play. It's off its lows, but, you know, it certainly doesn't look good. So there is some, you know, even with the VIX below, you know, threatening to break 14 again, there are places where there is real volatility. Real volatility, and that's where the value is. That's where there's money to be made on the selling side. Now, on the buy side, we continue to think that S&P options as a whole are underpriced, and there are individual names that are way underpriced and look super interesting in terms of their volatilities. You know, Goldman, when Goldman gets really cheap, watch JP Morgan, you know, watch IBM. Some of those names are starting to get back toward those kind of lows. So what we've got is the financials hitting kind of lower vols while oil services are hitting high vols. It's counter to kind of how the market was moving a few years ago. All right, and you know, aside from that, you've got a little bit of movement in tech, but really nothing special. All right, folks. On that note, I hope everybody has a great day, and I'll talk to you soon. Reminder: don't forget we've got our Saturday using options to trade for slides last night. It's going to be awesome. Just $77. So make sure you go to optionfit.com/events for details. And if you got questions, you can call me 888-TRADE-01, or you can email me, mark@optimport.com. Have a good one.